All attendees are in listen-only mode.
Good evening, friends, and welcome once again in this tech season. And we have come up with one more session, and very interesting. And I think for the first time, we have taken this topic only because of the interest shown by our today's speaker, guest speaker Abhijit Kelkar sir, and because of him, only today's session was possible. So first of all, thank you, Abhijit sir, for suggesting for this wonderful topic and need of the hour. Many are really confused for this, and many professionals are suggesting to scrap down also, or we can say are taken back. Few representation also I have received on social media that few people has and few trusts represented to remove this. So we'll study entire thing in today's session, whether it is really need that to scrap down or to take back again, and all the nitty gritty of this clause 44. So friends, before that, we would like to tell that in this tech season, in the last month also we have done with many wonderful session with a great speaker across India, whether it is from Ahmedabad or from Mumbai or from Indore and many other places as well. So all the videos are available on our Connect Easy YouTube channel, so you can check that. And would like to tell that on 17 August we have a wonderful session how to do 44 AB audit, tax audit with the help of technology. In that we got a great response, and more than 1,000 attendees have attended on our go-to webinar, and already we got a more than 1,600 to around 2,000 views on YouTube channel as well. So people are taking that benefit. Sir has shared a file also, Excel sheet and many other things. So you can also take that benefit if you are not aware of that. So go to the Connect Easy YouTube channel and you can check that as well. Even tax audit session we have conducted on 3rd August, immediately after the ITR season. That also got more than 3,300 YouTube views. Apart from GoToWebinar interactive interaction with the participant on GoToWebinar, so you can check that as well. So apart from that, we are coming with few more session in the month of September on the technology aspect, like technology is need of the hour. So we are coming with Excel session and Power BI session in the month of September. You can check that on our store. We have listed that webinar and webinar series and the course as a whole. So friends, today we welcome our all the guests. We have CA Puneet Mehta sir, a treasurer at Jain Chartered Accountant Federation, and again a technology man, we can say. We welcome you, Puneet bhai, for accepting our invitation. Would like to tell everyone that Chairman WRC Murtuza Kachwala sir has also accepted our invitation, and he also join anytime. He is right now traveling, and he may join at the end of the during the end of our session as well. We will wait and we welcome him also. We have a CA Anand Purana sir. We welcome you, sir, and thank you so much, sir, for accepting our invitation. Sir is also a technology man. Sir is a developer tool for this clause 44, which is a first time, and the technology is the need of the hour for the smooth transition. So we will see the entire tool after the session from Abhijit sir. So before I introduce, I would like to request CA Puneet Mehta sir, treasurer at Jain Chartered Accountant Federation, to address his keynote address for our today's topic. So over to you, Puneet bhai.
Thank you, Virag bhai, for giving me this opportunity. It is always a pleasure to be here on the Connect Easy platform, and I have seen multiple success stories coming out of this Connect Easy platform, because people have not only learned but executed a lot of things by coming to your platform. So fantastic work that you have been doing, and thank you very much for doing those things. And as far as technology is concerned, friends, my request or one observation is very clear, that government is now hellbent on using technology, whatever that data they are getting from the back end, and they are putting out new and new analytics tool, and they are sending a lot of notices or a lot of working where they are asking assessees a lot of questions. So whatever preparations that we are doing, we should do it in a way that we are able to reply to those notices at later point of time. Doing something in Excel and some other rough sheets and then preparing that, okay, I might not get the notice, is not a good task. So one has to look from that perspective. Second is the due date. More than 13 to 15 lakhs returns have been filed after 31st of July, and they all might have paid about 5,000 rupees per return. So simple calculation, government has earned more than 650 crores just by not extending the date. And while government has earned, it is the loss of the humans, those who have not filed the return on time. And this draws the attention that tax audit dates also might not be extended. Use technology to the maximum and ensure whatever work that you are doing, they are doing at, those are complete in all respect. Please do not keep something to be checked later, something to be done, okay, ye nahi mil raha hai, management certificate le lo, on all those things. So better to do it. And I wish Abhijit bhai all the best, and also my dear friend Anand Parana for showcasing the solution that he has developed on this particular topic. A good luck, and all the participants a happy learning for the next 2 hours. That's all from my side.
Thank you so much, Puneet bhai, for a wonderful welcome address and set the tone for our today's session. And now I would like to welcome our today's speaker, CA Abhijit Kelkar sir, a regional council member from Nagpur, and one of the most active professional, we can say. Thank you so much, sir, for suggesting this session and making it on time. I'm requesting, sir, that whether it is necessary to conduct in this week only, or we can postpone. Sir told no, it's the right time, we should do right now only. So again, thank you, sir. We got a great response. Already around 450 professionals are joined the session, and few more will be joined on as and when the session is progress. Thank you so much, sir. And now requesting you to take the proceeding ahead for our today's session, sir. Over to you, sir. Sir, you are on mute, sir. Let me tell you, sir. Let me tell everyone that I know Abhijit sir since last so many years. Sir was the auditor also in one of the was I previously worked as a public sector undertaking. Sir was our auditor as well, and now as our good friend also as a profession. So with these words, sir, we welcome you, and now you can take the proceeding ahead, sir. So we can see your screen as well, sir. You can put the presentation. Yeah, perfect, sir.
Now is it visible?
Yes, sir. Perfect, sir. Perfect.
Yes, sir. And I'm audible also. So thank you so much, Virag bhai, the brain behind this Connect Easy platform and the founder of Connect Easy. I also recognize the presence of CA Puneet Mehtaji, who is a treasurer of Jain Chartered Accountants Federation. I'm also having with me CA Anand, who will be telling you about some tools which he has developed, which will be at the end of this presentation. And I also recognize in absentia CA Murtuza bhai, Chairman WIRC, who will be joining us whenever time permits to him. So talking about the subject, let us start. Clause number 44 of the tax audit report, some confusions and clarification. So here we go. Before we talk about clause 44 of tax audit report, let us recap about the background of tax audit report. And everybody is aware that as per section 44AB of the Income Tax Act, if the turnover or the sales or the receipts, they exceed a prescribed limit, then one has to get his books of accounts audited by a chartered accountant. The limit was 1 crore, which was increased to 5 crore, and at present it is now further increased to 10 crore. So those whose turnover is more than this prescribed limit, they are required to get their books of accounts audited by a chartered accountant. And in a case of a person who is carrying a profession, if the gross receipts exceeds more than 50 lakhs in the previous year, again he is required to get his books of accounts audited. So friends, we all are aware when the tax audit, concept of tax audit was introduced in 1984, the basic purpose was to validate the income tax computation made by the taxpayer in the return and to ensure that compliances with the law of income tax is being done. So basically, tax audit was introduced because the authorities wanted rather from that time that a chartered accountant should verify entire record of the assessee, find out various non-compliances and accordingly report on those non-compliances. So basically any audit which is generally conducted because of any particular provision of the act, like Company Act or say Cooperative Act and so on and so forth. However, this particular tax audit, in my opinion, is nothing but answering certain questions that are prescribed in 3CD form. Originally, when this form was introduced, to my knowledge, there were a certain 10 to 15 questions, and now they have increased up to 44. And there are numerous things on which a practicing chartered accountant or the tax auditor is required to inform about any particular non-compliance, or is required to give some particular disclosures with respect to the assessee. So this was the basic concept behind introduction of the tax audit report. However, one will appreciate that over the period of time, this tax audit report is traveling beyond the mere compliance reporting. Now government wants even other things that are required to be reported in your tax audit report, and we as a chartered accountant day by day getting more and more burden on our shoulder to report them. However, since it is a legal compliance, we have to do it, and everybody is aware that with a particular notification, two specific clauses, clause 30C, which is about reporting of GAR, and clause 44 was introduced for reporting into the tax audit report. However, due to prevailing COVID-19 situation, this particular clause was kept in abeyance till 31st March 2022, and there is a confusion that whether this clause is applicable from the financial year 22-23 or it is applicable from the financial year 21-22 itself, for which we will be giving our tax audit report. In my humble opinion, since it has been said that it was kept in abeyance till 31st March 2022, which means any report filed up to this date, that is 31st March 2022, then reporting for this clause was kept in abeyance. So any report which is filed after this particular date, that is 31st March 22, then this clause has to be reported, which means when we are doing audit of the financial year 21-22, one has to report this clause 44 in his tax audit report. And you all are aware and will appreciate that the primary duty of submission of details, so far as this particular clause is concerned, we will not be discussing other clauses of tax audit report, but so far as this particular clause 44 is concerned, the primary duty of submission of the details is of the auditee, and we as a chartered accountant, as an auditor, our duty is to verify the information supplied by the auditee to us based on GSTR returns file, annual information statement available, and other records provided by the assessee. So as an auditor, what is expected from us, that auditee should give this information to you. You will verify based on the documents, based on the returns and other record available, and then accordingly you will report under this clause. So as I said, for the financial year 21-22, reporting under this clause is compulsory, which is mandated by the act itself. We as a we as an auditor, we are duty bound to report under this clause. And what is expected from us to be reported? This is a screenshot of the exact format of clause 44, and we'll be discussing about each and every column of this format in detail little later, because main confusions are lying in these columns only. So we'll be discussing about this format. But before that, please note that this new clause is applicable to all the assessees, whether the assessee is registered under GST or not. So any assessee who is required to get his books audited by a tax auditor, and tax audit report has to be uploaded, irrespective of the fact whether he is registered under GST or not, reporting under this particular clause is compulsory. And in fact, if someone who is not registered under GST, then getting this information from his books of account or verification poses a greater challenge in my knowledge. Anyway, if you are registered or not, you are required to get your books of account audited, number one. Further, if the assessee is required to get his books audited even under presumptive scheme of taxation, wherein he is showing a profit which is lesser than what is prescribed, then he is required to get his books of account audited. And in that case as well, he is required, the auditor is required to report the clause 44 while uploading the tax audit report. So the reporting is compulsory when the tax audit is compulsory, irrespective of the fact whether he is registered or not, whether he is a normal assessee or he is showing his income under presumptive scheme of taxation. So this is compulsory, and the most significant and interesting part of this reporting is you have to report about the expenditure. So the column says that you have to report all the expenditures you have incurred during the year. So nowhere it has been given whether they are talking about revenue or capital or what, which means all expenses, whether they are revenue expenses, whether they are capital expenses, they are required to be reported under this clause 44. We'll discuss about them in detail. So the particular format of this clause 44 is like this. Number one, which is a serial number. Column number 2, which says total amount of expenditure incurred during the year. So please note the word incurred. We'll talk about this also. Total amount of expenditure incurred during the year. Third column or the third column says expenditure in respect of entities registered under GST. Actually, third is not the column. Third is a main title under which we have three column, 3, 4, and 5. The first column, third column, it says relating to goods or services exempt from tax. Column 4 says relating to entities falling under composition scheme, and column 5th talk about relating to other registered entities. So whatever income, whatever expenditure incurred during the year, we have to bifurcate them into 3 parts. Part number 1, expenditure in respect of entities registered, for which we have 3 columns, column 3, 4, and 5, and column 6 is nothing but the total of column 3, 4, and 5, and then the last column, which is expenditure relating to the entities not registered under GST. So in short, one can understand that expenditure incurred during the year will be bifurcated into 2 parts: expenditure in the respect of entities that are registered under GST, and expenditure related to entities that are not registered under GST. And then we'll be discussing about all these columns one after another. So coming to the first column, which is titled as serial number. Friends, if you analyze column number 1 in that table, which says that its heading is serial number, which means a serial number which is a numeric is required to be given. For example, 1, 2, 3, 4, 5. However, while reporting, in my opinion, the reporting should be done like capital expenses, revenue expenses. Even you can report in further details, like you can say capital expenses, in revenue expenses you can say manpower expenses, or you can go further by saying electricity expenses, traveling expenses, purchases, and so on and so forth. So if this column can accept the data of alphabets, then in my opinion it will be beneficial for tax auditor to give the information in the required format. I am not sure whether the report, in fact any particular software you are using like CompuSoft or Spectrum or whatever you are using, I have been told that for when you are making basic entries into this software, it is accepting numerics also, it is accepting alphabets as well. But I wonder whether while uploading this tax audit report, it will ask only for numerics or whether it will allow alphabets as well. Anyway, in my opinion, that since the serial number is mentioned, there are columns given, then information in each different rows can be submitted so that their interpretation, their identification will be simplified. Like one can give consolidated figure for all expenditure, because nothing has been specifically guided that what exactly is required. One can have a view that all expenses, revenue, capital, are clubbed together and they are shown in a single row. That is also possible to be done. However, one can bifurcate expenses into revenue expenses, capital expenses, and show them under serial number 1 and 2 and so on. And as I said earlier, even one can go further and even write name like headwise, like direct expenses, indirect expenses, revenue, capital, electricity, manpower, and so on and so forth. Whatever which is suitable for him for reporting, he can do in that fashion as well. But in my opinion, even consolidated figures are also acceptable and can serve the purpose. But then if you are giving consolidated figures, then one has to keep the summary of how he has arrived at that, how he has arrived in that particular consolidated figure, so as later on he will be able to explain. But since number of rows are given, one can give detail about the various heads of expenses, or as I said earlier, one can always consolidate all the expenses together and show in a single row. So this is the column number 1, which is about serial number. Column number 2, if you see, it talks about the total amount of expenditure incurred during the year. And this word incurred is very important. It says total amount of expenditure incurred during the year which shall be reported. Now talking further, as I said, it is saying expenditure, it is saying total amount of expenditure incurred during the year, which means your expenses apart from those debited to P&L account, to trading account, will also include capital expenses made, and which means we will also include purchases as well. So whatever expenses you have incurred during the year will be either clubbed or shown headwise and will be reported in this column number 2, which says total amount of expenditure incurred during the year. Now this poses some particular issues. There are certain confusions that there are other expenses, there are certain expenses heads which are there in your profit and loss account, and whether you are expected to report them or not. And the first one up is like depreciation. Depreciation is debited to P&L account. So whether depreciation will also be included in the total expenditure? In my opinion, since depreciation is not an expenditure incurred during the year, it is just an apportionment. There is no need to give depreciation. Even same question may arise in respect of, say for example, bad debts written off. So in my opinion, this type of expenses are not required to be reported under this particular column. So far as depreciation is concerned, as I said, it is not an expenses toward any inward supply. The same should not be considered as expenditure. There is another logic as well, which says, see, whatever total expenses you are showing in column number 2, you have to bifurcate them into those from registered entities and those which are from other entities. And so far as depreciation is concerned, it is not possible to bifurcate it into those from registered entities and unregistered entities. Therefore, such kind of expenses, it is simply not possible to and required to report while reporting under clause 44. Going further, column number 2, we are talking, there are other expenses apart from regular expenses, purchases, capital expenses. There are other expenses which falls into the category of non-supplies, like payment to employees. There can be expense like interest paid to some outside parties, interest paid to the bank, interest paid to the partner, even remuneration paid to the partner, and so on and so forth. There are numerous expenses that are debited to P&L account which are incurred during the year. Whether they are required to be reported under this column, the answer is yes. All expenses that are incurred during the year are required to be reported. However, there are two approaches to this logic. One can develop his own approach and then he will report accordingly. The conservative approach says, since the heading does not say expenditure or supply, whatever you have expended, one has to report. This is a conservative approach. One can follow it. The another approach says, since the main objective of the central government for introduction of this clause is for matching figures with the GST return and so on and so forth, so only expenses related with the supply can be included. So there can be two approaches, and the appropriate authority within the due course may issue a particular clarification. And even yesterday only our institute has issued the guidelines wherein it has been specifically said that depreciation and bad debt written off is not required to be reported in column, but it is silent on this particular topic, which means whatever expenses that are incurred, irrespective whether they are towards supply of goods or services or not, if they are incurred during the year, they are required to be reported, whether revenue, whether capital, whether related with the supply of goods or services or not, except those expenses like depreciation or bad debt written off. So the total of this column 2, which will include all the expenses incurred during the year, we have to mention, as I said, you can mention either consolidated or you can mention headwise, and you have to keep the working with you that how you have arrived on this particular figure. So this is all about column number 2. Any questions that participants are having, we will discuss them at the end of my presentation. So this is column 2. Column 2, even there is another problem, confusion in so far as reporting in column 2 is concerned, is whether GST amount will be included into the total expenditure or not. You will appreciate that whenever we spend, whenever we expend, there are expenses where the GST amount is charged to the bill. Now whether this GST, because in books, if the ITC is available, then this particular GST is debited to ITC receivable account. But wherever the GST is not receivable, there is no ITC that is included into its natural head. Now the question arises whether GST amount will be included in the total expenditure or not. And in my opinion, since it is a tricky issue, in my opinion, since the term uses total expenditure incurred, so the title of the column says total expenditure incurred, it should include GST amount in respect of inward supply of goods or services or both. Because a clue we can take from the column 6, which talk about total payment to the registered entities. We'll talk about column 6 little later, but again this column 6, the title given is total expenditure, total payment. It said not incurred, it said total payment to registered entities, which means that GST has to be included while reporting in column 2. However, for us it is going to be a great issue, great problem, because as I said, the GST amount which is otherwise receivable as input credit is debited to ITC receivable account, and then adding it back for each item is going to be a big problem. There is another thought which says, since the ITC is available for any particular GST on expenditure, and since it is available, it is not your expenditure, and since it is rightly debited to ITC receivable account, it is not your expenditure, and you are not required to include in this column number 2. I believe this particular logic is relevant. So those expenses on which you have claimed the ITC need not to be added back to the expenditure for reporting into column. But as of now, since there is no clarification, the confusion remains whether GST of all the goods and services, irrespective whether the ITC is available or not, whether they are required to be added to this particular column. But as I said, in my humble opinion, if GST is receivable, it means that is not your expenditure which is debited to ITC receivable account. You are not required to add it to the expenditure while reporting in column 2. So this is all about column 2. Next part of this clause 44 talks about expenditure in respect of entities registered under GST. So as I said earlier, that for the entire year, column 2 talks about total expenditure incurred during the year, and next 2 part is out of this total, how much expenditure in respect of entities registered under GST, and column says expenditure in respect of entities which are not registered under GST. Now we'll see this part, expenditure in respect of entities registered under GST, and this particular section is further divided into 4 parts, and we'll see all the parts one after another. So its first part is column 3, which says it expenditure in respect of entities registered under GST relating to goods or services exempt from GST. So whatever expenses incurred during the year, one has to identify that what quantum of expenditure out of the total expenditure is with respect to goods and services that are exempt from GST. And when we talk about the word exempt from GST, we have to refer to the GST Act, and you all know that as per section 247 of the CGST Act, exempt supply includes following types of goods or services or both, which means those supplies which attracts nil rate of tax, or those supplies that are exempted under section 11 of CGST or wholly exempted from tax under section 6 of the IGST, and also includes non-taxable supply. So whatever is exempted from GST, and that too from the registered dealer, will be reported under this column. The one point one must note very particularly, say if there is a interest paid to the GST registered person, since it is a GST registered person, one has to report this under this column, because it is the payment, it is an expenditure made to a person which is otherwise exempt from tax, but it is made to a person who is registered under GST. Now this particular column 3 again poses some very typical questions that we will talk about. Please note that zero rated supplies from the registered dealer will also be included, provided it is exempt, it is zero rated. And please note that those activities or transactions which are not regarded as supplies as per Schedule 3 of the CGST are not required to be reported here. Schedule 3, or you all must be aware. In fact, I don't think that there will be instances where such kind of expenditure will be there. But if they are there, and if they are from registered person, then it will be reported into column 5, about which we'll talk a little later, or column 7. So there are particular instances like what will happen to the say for example salary paid to the partner. So this is a very tricky question. What will happen about the say for example interest paid to the partner, and that partner in his personal capacity is a registered person. Now whether that interest paid to partner will be taken into this column 3 or not. In my opinion, as a tax auditor, since this is a very tricky question, but in my opinion, since he has not raised any invoice or bill for payment of interest, and tax auditor is as such not supposed, if the information is given, if there is an invoice which says that the person to whom you are paying interest, it may be a partner, is a registered person, then only you have to mention this in column 3, otherwise you have to ignore that. So column 3 talks about all those supplies, all the expenditure relating to the goods and services that are exempt from tax. Going further, let us talk about column 4. So column 3 is about goods and services which are exempt from GST. Column 4 says expenditure in respect of entities registered under GST, however they are relating to the entities following under composition scheme. So this bigger head, that is expenditure in respect of the registered entities, as I said, there are 3 parts: expenditure related with the GST exempt goods or services, then expenditure that is falling under the category of from the composition dealer, and third one is from other dealer. So column number 4 again poses some difficulties in front of us. Simply reading the title, it appears very simple. Okay, expenditure incurred and falling under, from those who are falling under the composition scheme is required to be reported here. But the problem is how to verify, how to check. As I said, it will be the duty of the auditee to give this data to us, and we will be reporting. But again, if even auditee has given the data that this is from the composition dealer, as an auditor, it is expected from us to verify that whether that particular registered dealer is a composition dealer or not. And to verify that, we have 2 options with us. Number 1, we can verify the particular invoice, because if it is an invoice from the composition dealer, then it is specifically mentioned there. So one can visit and verify the invoices to verify whether it is from the composition dealer or not. Another option is one can go to GST portal, and by putting the GST number of that particular entity, you can verify whether he is registered as a composition or dealer or not. So the problem is, when the data is huge, when it is very big, like multi-locational entity, you are doing tax audit, or somebody is having huge amount of data, it is very, very difficult to verify that whether that particular supply is from composition dealer or not. And on the top of it, please note that in GSTR 3B, there is a space where we mention about all the supply made by which is exempt and which is from the composition scheme. So I believe even this data one has to reconcile with whatever consolidated figure mentioned in 3B, wherein exempt supply which is mentioned in column 3 and composition supply which is mentioned in column 4 should tally and reconcile. So this is again going to be a very tricky and complicated area so far as reporting is concerned. So going further, as I said, column 2, total expenditure incurred during the year, which is again divided into two parts: income expenditure incurred from registered dealer, expenditure incurred from non-registered dealer. Expenditure incurred from registered dealer, again there are three bifurcation. Number one, exempt from GST. Number 2, from composition scheme, and whatever that does not fall into exempt category or composition scheme will fall into category of this column 5th, which is relating to the other registered entity. So if anything is not falling under category 3 and category 4, but if it is from a registered entity, then we have to mention this into the column 5. So all the expenses from the registered dealer, number 1, either they are exempt from GST, column 3, they are from composition dealer, column 4, and if not this, any of these two, then column 5. This is how you will bifurcate entire supply from the registered entity, which is an expenditure for you. So we have seen how we are going to report all the expenses incurred from the registered dealer in column 3, column 4 and column 5. Moving ahead, column 6, which is the D part, fourth part of this particular section, which talk about payment made to the expenditure incurred in respect of registered dealer. Column 6 says total payment to the registered entities. It appears that this column is nothing but the total of all expenditure incurred and shown in column 3, 4 and 5. So prima facie it appears that it is a total of 3, 4, 5, and in column 3, 4, 5 we are talking about the expenditure incurred. But surprisingly, you will appreciate that the title of column 6 says total payment to the registered entity, and there is a difference between expenditure incurred and payment. So incurred is something different, which is for the particular year. Payment, it doesn't mean for a particular year, it can be like advance given or payment of the previous year provision. So it is not clear whether column 6 talks about payment or it talks about only expenditure incurred, which is mentioned in column 3, 4 and 5, and this is only the total. Surprisingly, please note, even your utility wherein you are putting this figure, column 3, 4, 5, the 6th column is not automatically generated. It is not taking total of 3, 4, 5, which also means that column 6 is in addition to column 3, 4, 5, because as I said, it is given total payment to registered entities, which means not only incurred expenditure but even payment to previous year provision, even payment of advance will be included or shall be included in column 6. However, this is a particular topic of debate. No particular clarification is available, but again, to make it simplify and to avoid confusions, I think this is not the intention of the lawmaker, that showing incurred expenditure on one hand and taking total for the payment. So one can, I believe, assume that whatever expenditure incurred, that is mentioned in column 3, 4 and 5 should be total and given in column 6. However, as I said earlier, the title says total payment. It is not free from doubt whether only incurred or total payment made during the year has to be mentioned here or not. Well, above issue is also required to be clarified by appropriate authorities, and I believe in the due course of time they will come out with some clarification, or they will amend this title of column 6, making it total expenditure incurred in respect of registered entities instead of saying total payment to registered entities. Anyway, this is the column 6, wherein, as I said, 3, 4 and 5 figures are required to be added, clubbed together and to be mentioned in column 6. And column 6, again, there is another tricky question. Since the word uses total payment use, as I said earlier, since the word uses total payment, which actually should be total expenses incurred. Anyway, even if it is total, total means it should include GST. So as I said earlier, that GST should be included into the natural head of expenditure while reporting in this column. And as I said, this is a unexplained query, that whether GST with respect to the purchases or expenses or supply, wherein ITC's level is also required to be added or not. In my opinion, not. But nobody knows what is the intention of the lawmaker, and if it is required to be added, it is very difficult from even software point of view, or whatever tool you are using while accounting of the record, to identify and to club that particular part of GST into its original expenditure, and that is going to be a huge task. And since if the assessee is having voluminous books, then it is going to be the very difficult one. However, if it is at all talking about the payment part only and not only expenditure, then one can identify what payment has been made during the year. This is just a formula to understand what payment has been done instead of only expenditure incurred. So you can have all the sundry creditors which are GST registered as on 31st March 21. You can add total expenditure incurred during the year, which is credited to these accounts, and you can deduct the closing balance. You will find out what payment is made to the registered entity. So if at all we are talking about payment and not expenditure incurred, then this is the formula by the use of which one can identify the payment, how much payment is done or not. But as I said earlier, this must not be the intention of the lawmaker, and only expenditure incurred, which is mentioned in column 3, 4 and 5, is required to be reported here. However, in future we expect a particular clarification in this regard. Now coming back to the last column of this clause, which is column 7, it says expenditure in respect of entities not registered under GST. So as I said earlier, column 2 includes all expenses, whether they are capital, revenue and so on and so forth. Then this total expenditure is divided into two parts in respect of entities which are registered under GST, again wherein exempt from GST, composition, other registered, and rest is from the unregistered GST. So column 2 minus column 6, you can say, should be your column 7. So column 7 is in respect of entities not registered under GST, and this include expenditure incurred from the person that are not registered under GST. And again, as I said earlier, even this data is being given by the auditee, one has to verify whether it is from unregistered dealer or it is from the registered dealer, because accordingly one has to report. Because if it is from the registered dealer, then obviously it will be column 3, 4, 5, the total of which is column 6, and if it is from the unregistered dealer, it will be given in the column number 7. And like the previous part, which is about from the registered dealer, there is no breakup required since it is from the unregistered dealer. There is no breakup, exempt, taxable, and so on and so forth is required in column number 7. So to sum up, the serial number column, we can either put numerics 1, 2, 3, 4, or at present we are able to put alphabets as well, wherein we can give consolidated figures or we can give nature wise, like capital, revenue. Even in revenue you can give say if you want electricity and traveling and so on and so forth, purchase and so on and so forth, or one can give consolidated figure. The next part is the expenditure, the quantity, the amount which you will be giving, which is again bifurcated into two portions, from registered dealer and from unregistered dealer. And this is how the reporting under this particular clause is expected from us. Anyway, the last point, which is again must be in many members thinking about, that whether we need to include expenditure incurred in respect of non-GST supplies like petroleum, alcohol, or liquor or not. In my opinion, yes. Column 7, we have to mention all the expenses that are incurred for petroleum, alcohol, and so on and so forth. However, one can argue that for a petrol dealer is also registered under GST because he's selling, say for example, oil, or he's selling something else. Then whether it will fall under the category of registered dealer or it will be an unregistered dealer. Again, this is a very tricky question, but in my opinion, since he is not uh, 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 registered so far as sale of petroleum is concerned, and even the bill that is being issued for purchasing petrol or alcohol or liquor, they does not bear the GST number of the dealer, it will fall under the category of the last column, that is expenditure in respect of entities that are not registered under GST. So this is how total information is required to be given in this clause 44 in various columns. Now coming back to another important aspect of this presentation is what are the serious challenges that are being faced by we chartered accountants while reporting under clause 44 of form 3CD, that is your tax audit report. And the first challenge is, yes, this is the first time we are reporting under this clause, and since this is first time, we can argue that we are not ready, we were not aware that what to report, when to report, how to get that data, how to verify this and that. But there is a counter argument that this clause was introduced 2 years back. Though it was kept in abeyance, it was introduced 2 years back, and by now it is expected from the professional that they were knowing that this is what is expected to be reported, and then how to generate this data, how to verify this data, and so on and so forth. So this particular argument that this is the first time and we are not ready, in my opinion, does not hold ground. However, as the case may be, this is the first time, and yes, we are not ready, we were not aware, but since it is the requirement of law, we have to report. But the biggest next problem is how to generate this data, how to calculate this data from the given accounting softwares, because the record is maintained on various type of accounting software like Tally or Wingsman and whatnot. There are some ERP package and so on and so forth, which were not made, they were not customized to prepare this data. Though now we are having CA Anand with us, who will be telling us how this report can be generated from Tally. But friend, as I said in the beginning, the time is less. We are not expecting any even extension of the tax audit report. So with the available time, and what would I say, uneducated clientele or their accountant, how this particular change will be made to your software and how this data will be generated is going to be the biggest challenge, and only future will going to tell how we are going to get this data, how even your audit is able to generate this data and report to you, and how you are going to verify it and report accordingly in clause 44. In many cases, we know that at present the even services of the chartered accountant or auditor are also taken while even preparation of accounts as well, so as a proper guidance can be given. So there can be a situation that this particular responsibility can be imposed upon the professional itself, that you decide how to do it and go ahead. We are the auditee or the assessee can simply say we are not bothered, or we are not even aware that how to do this. But since we have to report it, we have to make some changes in the system itself and get this data done. If it is manual, there are very few cases I believe where even manual accounting is maintained, but there are cases where even manual accounts are maintained. In that scenario, I feel it is next to impossible to generate this data within the available time and report it. So it is going to be very difficult. Another serious challenge that we'll be going to face is we need to maintain another reconciliation. Like if you are having GST audit, therein you are having a reconciliation of what turnover your GST returns are saying and what turnover is being appearing in your financial. Now the other side of your financial, that is debit side, there will be another reco, because again you will be having total expenses that you are going to report in clause 44, which will be reconciled and should be reconciled with whatever appearing in your financials, and also vis-a-vis whatever appearing in your 3CB as well. So there has to be some reconciliation available, that how you have arrived at this particular figure. Because friends, you will appreciate from 3CA and 3CB, whatever may be the case, we talk about true and fairness of the financial statement, wherein we say to the best of my information and according to the explanation available, the accounts are showing true and fair view. However, if you see the fifth part of your 3CB, which talks about 3CD, the words used are true and correct. So far as reporting in 3CD is concerned, it is talking about true and correct and not true and fair. So whatever you are reporting in tax audit report has to be correct. It cannot be partly correct and partly reported, or partly given and partly disclaimed, and so on and so forth. In my humble opinion, it has to be fair, true and correct, or it has to be disclaimed. Any third option is not available. That's why I'm saying whatever reporting you are making in clause 44, it is a very big challenge to get that data, to check that data and reporting accordingly and report accordingly. And as I said, another reconciliation is required. And the another challenge that we'll be facing is, what if the tax auditor and GST consultants are different? Because there are cases wherein only income tax practice is being followed. Even while the GST law was introduced, I have seen many senior chartered accountants who renounced their indirect tax practice of sales tax, stating that now they don't want to read new things, they don't want to read at this age of their seniority, and they simply renounce their GST practice or given the sales tax practice to somebody else. But now the time, because of this clause 44, has arrived, wherein now even if you are exclusively practicing in income tax, you are supposed to know what is exempt under GST, you are supposed to know what is a composition dealer, you must be knowing how figures are reported in 3CB, and because you have to reconcile them all. So even this is very surprising and new thing, wherein a tax auditor is also expected to know another law, that is particularly GST, and then report accordingly. If the tax GST consultant and tax auditor is one and the same person, then it is okay. But if it is not, again it is going to be a serious challenge when it comes to reporting under 44. So till now we have discussed about the various columns that are given in clause 44. We have discussed about various challenges that are going to be faced by we chartered accountants while making reporting under this clause 44. And then the question arises, then what is the solace? What is to be done? So well, when it is not possible to verify them, it is not possible to get this particular information, the only thing that is left is to disclaim. And how one can disclaim, so far as this particular clause is concerned, I am going to give some examples of disclaimer that one can put in his report. You can take note of them and accordingly you can give your disclaimer. You can have your own format of disclaimer and disclaim accordingly. This is some of the examples how one can disclaim. So first kind of disclaimer can be, no details as required by the clause 44 is separately maintained by the assessee, and in absence of these we are unable to comment. As I said, 3CD we have to report true and correct. So it cannot be partly correct and partly not correct and then it is supported by a qualification kind of thing or disclaimer. No, either give true and correct figures as per your verification, your knowledge, or give a disclaimer. And the first kind of disclaimer one can give is, no details as required by clause 44 is separately maintained by the assessee, and in the absence of this we are unable to comment. Another kind of disclaimer can be, assessee informed that the required information under clause 44 has not been maintained. Further, the software of the assessee is not configured to generate reports on the information asked for under this clause, and in view of the above we are unable to verify and report the desired information under this clause. So this can be another disclaimer. Third kind of disclaimer is very important and unique. Please note, which says, we have been informed by the assessee that the information required under this clause has not been maintained by it in absence of any disclosure requirement under GST. So you will appreciate there are no such disclosure requirement under GST, and assessee can take this plea, this shelter, that since there are no such disclosure requirement under GST, he has not maintain this kind of data and you can disclaim accordingly. Please note, as I said earlier, it is the responsibility of the auditee to give the data and you have to report accordingly. If this particular information data is not available, please take this while obtaining the management responsibility letter, wherein it is categorically mentioned that this type of information is not available, and on the basis of that management information received by you, you can always disclaim in this fashion. So next kind of disclaimer can be, it is not possible for us to determine the breakup of total expenditure of entities registered or not under GST, as necessary information is not maintained by the assessee in its books of account. Further, the standard accounting software used by the assessee is not configured to generate any report in respect of such historical data, and in absence of any prevailing statutory requirement regarding the requisite information in this clause, in view of the above, we are unable to verify and report the desired information in this clause. So this particular disclaimer is quite comprehensive and one can report accordingly. One can always say, in absence of the proper system of the assessee, we are unable to comment and give details as required in clause 44. So the details required are not available, not verifiable, not possible for whatever reason. one can always disclaim. And friends, we will appreciate disclaiming is not new to us. Even you can see, like reporting in respect of payment of or receipt without an account pay check instrument, we are disclaiming that because no information is in the possession of the assessee, we cannot comment. Even the guidance note issued by SCA also categorically given this particular disclaimer that if information not available, you can disclaim. Even in respect of stock, many of us are disclaiming that since quantity wise details of the stock not maintained, we are not in a position to report. Subsequent consequences will not take into consideration at present, but disclaiming is not new to us. We are used to it. We are used to disclaim whenever certain information is not available. Like we are disclaiming for prior period items that no specific information maintained. We are disclaiming about ICDS and so on and so forth. So disclaimer is not something new. We are used to it whenever information is not available. But since this this is the first time we are having this particular clause, one can identify whether it is possible to report or not, or whether he has to go for disclaimer. But in my personal opinion, friends, I believe if the case is of an assessee wherein the say for example the products is only single one, or it is otherwise possible to generate this data or identify whether it is from registered dealer or not, since the volume is say low or the quantum is less, in my opinion, in such scenario one should report in this particular clause other than disclaiming. But if the volume is it is voluminous, if it is very large, then of course if the reports are not available, if the particular information is not available, one can always disclaim. So if you are auditing any organized sector like bigger companies, one can always ask for management representation about this particular information, and based on that particular information one can always report or disclaim. But for smaller organization, for unorganized sectors, I believe it is a very difficult situation that what to do, because at present we are not aware that what exact action government is going to take on the basis of this particular, say for example, disclaimer or even disclosure also. Someone jokingly yesterday told me whether government will be going behind those figures which are registered under the column 7 as from unregistered dealer, and if the volume is more, government will further investigate whether why those particular dealer of yours have not registered themselves. Another one was saying what information they want to gather from this report is something not even comprehensible, that what exactly they are going to do this information, because the basic intention of having 3CD is with respect to computation of income only, whether things which are to be excluded while computation are really excluded or not, and so on and so forth. This data with respect to GST is as of no use so far as computation of income is concerned. But since now this is included in your 3CD, one has to report. So disclaimer is the only option recourse available when the things are not in order, and the question remains now where to disclose, where to give this disclaimer. Anyway, 3CA 3CB is the only option where you can give disclaimer, because in 3CD template there is no place available to give any such kind of disclaimer. In 3CA you have to give this particular 3CA or 3CB, whatever may be the case, you have to give this particular disclaimer and accordingly file your tax audit report. So in nutshell, one will appreciate that in bid to increase the transparency and genuineness of transaction, this particular clause was introduced in tax audit report. But however, since entire information to my knowledge is available in GSTR return, which is again divided into so many columns and rows and information, there is as such no necessity to have this particular clause 44 in tax audit report. There are various representations as well to remove this clause or keep this clause in abeyance. But in my personal opinion, again, I have been told that even certain CAs have already uploaded their tax audit report with this clause, and since part of the reports are already being uploaded, I don't feel that they are going to remove this clause in between this period. They may remove or they may amend it in the next period coming in the future. As of now, I don't see that there is any possibility of removal of this clause. And as I said, since this is the requirement of the legislature, one has to report there. So before I conclude and say thank you, let me wish everyone a very happy, hectic audit time ahead in the nature of tax audit. And I believe bigger is the client, bigger is going to be the risk. As I said, if it is from organized sector wherein a good software being utilized, or the software or the system is amended and corrected according to the requirement, then it is going to be some relief. Otherwise, it is going to be a very big risk, very big challenge for us. So bigger is the client, bigger is the challenge, and as the saying goes, let the risk and fees be commensurate too, because negative or wrong reporting in this column is not advisable. One has to be very careful while this reporting, and so as I said, the risk and the fees should be commensurate as well. And before I conclude, let me wish you all a very happy tax audit season. So I believe in last say 45 minutes or so, I have tried to explain what different information is expected to be given in the different columns of this tax audit report, clause 44. Last 15 minutes before Mr. Anand will be telling us that how one can use certain tools and technique to generate this information. Let us have some question answers. If they are there, I will try to answer them. Over to audience. Virag bhai, how we are going to take this question answer? Please guide.
Sir, there are many questions in the question tab. If you can open that question, it's on control panel, so that we can take from there as well.
Just a minute. I'm just going. In control panel, we have question, yes, and I'm
the square box you can click, though it will be a bigger screen.
Okay, I'm doing that. This is not happening. Let me see. Virag bhai, I'm not able to see the questions somehow.
Sir,
Will you please read them for me?
Oh, sure, sir, sure. Sir, RCM paid expenditure will be treated from unregistered or registered? Question from Abhinav Kumar.
Wonderful. So there are expenses on which you have paid RCM. Now whether they are from registered person or unregistered person, again as I said earlier, it will be the invoice that will determine whether it is from the registered person or not. So if it is registered person, invoice is having details of his registration, it will be reported as registered. If no, then it will be treated as from unregistered person.
Sir, again, second question from Kamlesh ji, whether expenses on which RCM paid need to report. Also, trading in pulses or scrap material purchased from unregistered dealer, dealer need to show as payment to entries not registered under GST. In such cases, if amount are used, will it be any confusion in the mind of IT department that so much expenditure from URD dealer and result in scrutiny?
Well, as I said, you never know what kind of opinions the department is going to have from this presentation. But yes, if you have purchases which are from unregistered dealer, you have to show them into the column of purchases from unregistered dealer, and this is going to be a bigger challenge when you are, say, for example, dealing in cotton, wherein you have to pay RCM on that as well. So that is going to be the bigger part of your presentation. But yes, it is an expenditure and you have to report them.
One question from Sandeep. Can the reporting be GST and number wise where there are multiple GST registration for the same assessee?
Wonderful. See, this is what I was expecting. So there are cases wherein a single assessee is having multiple GST because it is having multiple location. Now, how reporting should be done? See, the answer is very simple. If you are say auditing the head office or the main office, the registered office, wherein entire data is consolidated, the report is again on the consolidated data, and there is no requirement as such to give registration like TIN number wise reporting. But as an auditor of the head office, for example, you have to keep that reconciliation with you, and you have to report the total figures while you are uploading the tax audit report of the head office. But yes, you have to gather all the data. Even you can ask, say for example, you are having one office in Mumbai, one in Madras, another in Calcutta, and one in Delhi, and if they are having their separate tax auditors, you can always ask them to generate that data, verify, and accordingly consolidate. But yes, total figures are required to be given.
Sir, in column number 2, expenses includes depreciation salary as well.
No, this was already explained by me. Depreciation, book days written off are not required to be mentioned. So far as salary is concerned, there is a view that salary also fall under the category of clause 3, wherein employer to employee services given are exempt. So one can always say that salary will be mentioned into column 7, but yes, salary is required to be mentioned in column 2.
Sir, what about interest payments?
Interest I have already explained, but since it has been asked, interest again an expenditure required to be mentioned in column 2. And as I said earlier, if the interest is paid to the registered dealer, and if there is information available to you to identify that this is from a registered person, he is registered into his individual capacity, it will be reported under column 3, or otherwise it will be reported into column 7. But yes, interest paid is required to be added.
Okay, sir. And what about the restatement of debit and credit, sir?
What is this? What is the question?
Statement of debit and credit.
I apologize, I am not able to understand, but this sounds something related to the amounts written off or something kind of that. And if it is so, then it is not required to be added because this is not expenditure incurred during the period. If restatement means
just like depreciation, salary, bonus, remuneration to partner, interest to partner, etc., are not being paid to a different entity, and such payments are not liable to GST. Hence, in such cases, would it be suffice for the tax auditor to comment in Form 3CB 3CA that clause 44 details are not being given for such expense, or we should mention the same and show those values as not registered under GST?
And will you please repeat this once again?
Yeah, sure, sir. Interest to partner, salary, bonus, depreciation not being paid to a different entity, and such payment are not liable to GST as well. Hence, in such cases, would it be suffice for the tax auditor to comment in Form 3CB or 3CA that clauses 44 details are not being given for such expenses? Or we should mention the same
simple. I have explained earlier, depreciation, book days written off is not required to be reported, but salary, interest is required to be debited. And one has to say, for example, either say that these are the total expenditure and how much pertains to from registered dealer and how much pertains to unregistered dealer, or one can say this information is not available, hence we cannot comment on that. There is no third option available. You cannot say that this clause is not applicable or the expenses are all expenses are not falling under the GST category and so on, because that will not be the case.
Sir, Seema madam is asking whether reporting is required for Ind AS entry for fair value MTM loss Ind AS 116.
No, in my opinion, this is not expenditure incurred during the year. These are some certain other type of entries like depreciation or bad debt written off for some true and fair view of the financial statement, and hence these are not required to be reported under this clause.
Sir, what about prepaid expenses? How to report the same?
I have already said that previous columns, that column number 3, 4, 5, they talks about the expenditure incurred during the year from the registered person, and column 2 is also talking about expenditure incurred. So far as advance payment is concerned or prepaid expenditure is concerned, this is not the expenditure incurred during the year, but even I have explained that this column 6 is again creating confusion because therein total payment word is used. But in my humble opinion, since we are talking about a particular financial year and the expectation of the authorities must be to tally these figures with the GST data and so on and so forth. So any advance given or any prepaid expenditure which might not be expenditure in future, which might be even refunded or adjusted and so on and so forth, should not be reported in this clause 44. So advance given, in my opinion, should not form part of this clause.
Then we have a few requests for presentation to be shared. PPT for PPT.
Yes, it is up to you, founder sir, to present this, and I believe this will be available on other platforms as well. So this will be shared by the organizer. I'm sure about it.
So Nitin is asking, shall we include GST amount in expenses or no? What is the conclusion?
This I have also explained in my presentation. In my opinion, if GST is receivable, ITC is available, then that particular part of expenditure is actually not your expenditure. So GST in such case is not required to be added. Other cases where you are not taking ITC, GST will forming part of that particular natural head. So there is no problem in reporting that. However, as I said earlier, again, the column 6, which says total payment, there if we interpret it as it includes payment and not expenses, in that scenario, in that particular case, then GST's amount will be required to be added. But in my humble opinion, the plain reading and the logic says if GST is receivable on any particular expenditure, it will not be added. Otherwise, it will form part of the natural head.
Sir, one question: PTEC, PTRC, interest on GST amount paid, whether to be shown under which clause?
Wonderful. See, there are even why profession tax and why other tax, even corporation tax you pay income tax, you pay other taxes. These taxes all are expenses which are debited to your P&L account. And since the word uses expenses incurred during the year, yes, whatever amount you have paid as PT, as corporation tax or income tax or any other tax will be forming part of your column 2, that is total expenses. And since it is from unregistered person, it will taken into the 7th column, which is expenses from the unregistered person. But otherwise it has to be reported because they are your expenses. See, nowhere it has been given that expenses with relate to the supply of goods and services is required. It is given expenditure incurred during the year. So whatever expenditure you have incurred during the year, you have to show it.
Right, sir. Sir, Sushil Agarwal ji is asking, can you please explain what is the purpose of asking these details in tax audit report? Whereas the income tax is being computed based on TAR without this information till 31st March 2022.
I completely agree and endorse your views, Agrawalji. There is no necessity, not a single percent necessity of having this information in tax audit report, because this information is already available in GST return and so on and so forth. But it seems that the government is of the mindset that they want more and more information from the assessee or from his auditor. So these disclosure requirements are growing day by day, and with the technology in hand, now they are going to compare. See, you will appreciate how wrong we were logic we were having with respect to any other income which is not reported in profit and loss account, and we used to add say agriculture income or other income of a proprietor, and we used to disclose that particular amount in the tax audit report, stating it as the income which is not forming part of the profit and loss account. And everybody of us aware that everyone has received notices across India that this particular income which is not part of the P&L account is now being added, and then assessment is done accordingly, which is wrong. So you never know what kind of matching, what kind of reference the department will take from this disclosure. So one must be very careful while making any disclosure, that what reference, what conclusion can be drawn from this, and in what trouble one will land. So one is to be very careful. But answering simply your question, I don't see any necessity of having this clause so far as computation of income is concerned, or so far as tax audit is concerned. There is simply no necessity, and in my opinion, this clause should be dropped immediately, which is not happening, unfortunately.
Okay, sir. So next question from Sandeep ji. Zero-rated supplier taxable with 0% tax and should not be classified as exempt under Part A. Rather, it should be forming part of Part C expenditure from other registered entities. Your views, please.
Zero rated supply, you rightly said, will form part of the column 6 and not column 3. I agree. I agree with you. I think I have covered this while giving my presentation.
Sir, next question we already covered. Interest paid to bank, will it be covered in column 3
yes,
or 5?
Yes.
With respect to column 3, third-party software that we use, does the total of 3, 4, and 5?
Please repeat your question. I am not able to.
Column 6, third-party software that we use, does the total of 3, 4, and 5?
As I said,
yes, sir.
As I said, the template is not automatically taking a total of 3, 4, and 5. So that is not the case. But however, as I said, that logic says that it is the total of 3, 4, or 5. So if the system or the third-party software is not taking, then you have to calculate it yourself and put that figure into column 6.
When one uploads 3CD, no particulars are reported in 3CD. That is capital or revenue. Naresh ji, I think the question is half side. We have a question from Hiren ji. If financial statements are made on inclusive method of accounting, whether GST included in purchases, whether the reporting of purchases, will it be GST or without GST?
Well, I think I have, Virag ji, I have already answered this question. We will not take this.
Okay. Sir, how to report in case of clients who are registered as composite dealer, as he is not allowed to claim ITC?
See, there is no question whether the dealer is composite or not, or whether it is registered or not. You have to report, and you are reporting whatever expenditure you are having, whether they are from registered person or whether they are from unregistered person. And so far as the ITC is concerned, I have already explained, if ITC is not available, it will be added into the main expenditure head. There is no problem in with respect to that composition dealer.
Right. Sir, what about expenses debited to capital account in case of individual tax audit case? Do we include such expense or payment also in the CAIIB reporting?
So he must be asking the withdrawals that are debited to capital account, and since it is not a business expenditure, it is a withdrawal. There is no question of reporting them. No point in reporting them.
Okay, sir. Sir, where to disclose the exempted expenses made from unregistered person, like license fee paid to government?
I have also explained this. License fee paid or even taxes paid, they are expenses. Column 2 they will be disclosed. Since they are from unregistered person, they will be taken to column 7.
Sir, how unregistered assessee can report under clause 44?
Anybody, unregistered, registered, reporting is not done by the assessee. Reporting is done by the chartered accountant. And even if the assessee is unregistered, we as an auditor have to bifurcate and identify what are the total expenses, how many of them fall into the expenses from registered dealer, and how many of them fall into the category of registration expenses from unregistered dealer. There is no question whether the assessee is registered or not registered, doesn't matter.
Right, sir. So Kailash ji is asking, if we have already submitted audit report for this year, what is the reports now?
Well, if there is a mistake in your tax audit report, you can always file the revised tax audit report. It is possible.
Sir, how to extract the expenditure from books of accounts versus GSTR 2A using Excel, as the supplier name is different between books and GST. So kindly suggest the easy way to match books and 2A.
Well, for this we have to take a separate session wherein we will have either Anandji or somebody else who is expert in Excel, that how the VLOOKUP should be used or basic changes should be made, so that this kind of comparison can be done. This is not the time to answer such kind of question.
Right, sir. Sir, in case of entity where POCM is applicable, in that case, direct expense not debited to P&L, transfer in inventories. In that case, how we report in clause 44?
I'm not able to get this question, but what I understand that there are expenses or purchases which are directly debited to the inventory, and only the consumption part is taken to P&L account. Even if it is the case, as I said, purchase are required. Expenses, anything incurred, whether it is debited to inventory or taken into P&L account first, you have to report it. Doesn't matter how you are accounting them, like you are directly taking them into the inventory or you are taking them to the P&L account, opening plus purchases minus closing. That doesn't matter, you have to report them.
Right, sir. Sir, Ritesh ji is asking where to report discount given against sales.
Discount given against sales is not an expenditure incurred per se, because there is no outgoing as such, there is no money going out. So in my opinion, discount given on he's asking about purchases.
Sales, sir.
So discount given on sales will not qualify as the expenditure that is required to be reported in clause 44.
Yes, sir. Sir, how provision for expenses related to registered person is to be reported here?
See, provision is made on the basis of some known liability which you are going to pay. If it is so, then that amount will, which is incurred expenditure during the year, will be shown up. But provision if simply made on the basis of some assumption or for only having a true and fair view, only to have a existence of matching concept, in my opinion, in such case, such kind of provisions will not be reported, because there is no expenditure identifiable and quantifiable which is being incurred. But if the provision is made because the liability is known, because say for example invoice is available, or there is a reasonable certainty that this amount you are going to pay, yes, it will be your expenditure incurred, and then you have to report it.
Right, sir. Sir, discount given to registered person, sir, how that is reported?
I think we have covered this. Discount given we have covered.
What about capital expenditure, sir?
Capital expenditure, yes, you have to report this. I have said that expenditure, whether capital or revenue, everything has to be reported.
Sir, is diesel and petrol purchase is to be reported in column number 5, like relating to other registered entities, or reported in column 7.
I have also explained this. Diesel, alcohol, generally their bill, they do not have this registration details, so one can always take them from the unregistered purchases and take them into the column 7. So they are required to be reported, but in my opinion, since they are from those dealers who do not issue invoices that are having GST details, so one, though he might be having some registration of GST because of sale of oil and so on and so forth, but since the bill is not having GST registration detail, one can always treat them from purchase from unregistered dealer.
Right, sir. Sir, total payment to supplier will not include GST, while in column 2 it will include GST. Then how it will show correct picture?
This is also already explained in detail. No need to reiterate all these things.
Sir, whether in column 2 we need to report provision for expenses? If yes, and then the vendor is not identified, how it will be reported in case of registered and unregistered dealer?
This is already explained. When the vendor is not identified, provision is merely done for the matching concept or for a true and fair view. There is no logic in reporting it in column 2. We have already covered this.
Right, sir. I think, sir, one request is there that what is in the guidance note that there are any disclaimer advised by the ICAI for clause 44 that can be used for unorganized areas or entities.
True.
That only they are asking, sir.
What
disclaimer provided by ICAI?
I have already covered some disclaimers that can be given in my presentations.
Right. Sir, for assessee not registered under GST, like hospital or commodity under exempt, whether this clause need to report or disclaimer to be given?
Report, yes. Disclaimer only if record is not available. Reporting is compulsory.
And GST reversal expense to be included, sir?
GST reversal expenditure, I am not able to understand this. But any expenditure, whether reversal or whatever, if it is paid, if it is incurred, it has to be reported.
Sir, what about appropriation like dividend, deferred tax expense, income tax write-off?
This is also covered, Virag Bhai. This is also covered.
Sir, I think now all the questions are already covered.
Yes. Thank you so much.
Yes, sir. So, friends, if anything is there, we can take on mail also. So you can send that. We'll try to cover that as well. So thank you so much, sir, for the wonderful deliberation and patiently answering all the questions, sir. A wonderful and a memorable session, sir. Thank you. Thank you so much. So now we are coming with Anand Korana, sir. technology man. Sir has taken us so many sessions on technology on various platforms, and for students and for the professional, many others. And now Sir has come up with the this clause 44 tool to solve the difficulty faced by the professional. So would like to request to showcase the same to all the professionals. So sir, you can share the screen and you take the proceeding ahead for this session.
Thank you so much, Virag. Thank you so much. Thank you so much, Abhijit ji. It was a wonderful session.
Sir, your
what we have
clear, sir.
Hello.
Audio is not clear, sir.
Audio is not clear. Give me a minute. Hello, Virag, is it any better?
Yes, sir. Better, sir.
Yes, sir.
Please
Better.
continue, sir.
Yeah, so what we have done is here. First of all, thank you, Virag, for inviting.
Sir, not audible, sir. No, sir. No, sir.
Hello,
Yes, sir.
is it audible?
Yes, sir. Yes,
Is it
sir.
audible?
Continue, sir.
Yeah. Yeah. So what we have tried to do here is we have tried to develop an utility within the tally to comply with the clause 44. So what I'm going to do is I'm going to show you that utility. Almost all the points are covered by Abhijit ji, so I will not go into that aspect. Just one small clarification from my side. The column 6 had a lot of confusion in the clarification. The guidance note says harmonious reading is a total and not the payment. So that's a small clarification from the guidance note. Otherwise, yes, it is a yeah. Now let me just show you the tally part of it. So in tally, we have developed this add-on whereby the moment you add the add-on, you will have this additional line item here called clause 44 report. The moment you click it here, it will ask you for a revenue expenditure or capital expenditure. The moment you say revenue expenditure, it will give you the clause 44 report. It will list all the items which is debited to P&L, whether it is a purchase, direct expense or indirect expense. Everything would be listed here, and it will give a bifurcation of the expenses as per P&L, exempt from composition dealer, from other registered dealer, registered total, unregistered, and we have given one more column called uncategorized. For all the confusion for which Abhijit ji has rightly given the clarification like depreciation or some expenses which need not be reported, it will first fall under uncategorized, and all those cases where the client has not done the correct configuration will also fall under uncategorized. You need to go inside the and say whether it is, let's say for example, provision for salary or expenses paid directly through the payment entry and not routed through vendor. Lot of mid-sized clients will have these cases. So how to do these things? So these are the uncharted territory right now because this clause is getting applicable for the first time. What we have done here is when you activate this module, we have given the utility to verify creditors. The moment you say yes, it will open the list of all the vendors, all the creditors, their PAN number, their registration type, their GSTN. Your job as a chartered accountant is to give this Excel file, take this report into Excel and give it to the client and verify. This would be kind of a client representation. If required, you can modify this here. If required, you can verify PAN right from here. It will take you to the GSTN site for the verification. Of course, you need to put CAPTCHA to get this detail. But once this configuration is done, your report is ready. Basically, if you say this, how we have solved this in technology is this 4 column: exempt, composition, registered, and unregistered. Basically, there are 4 columns. Out of this 4 column, composition, other registered, and unregistered, these 3 columns are flowing from your vendor master, right? Yeah, it is flowing from your vendor master, and the exempt is flowing from your type of expenses. Again, we have given here the option you can go till the entry level and change the details. So drill down is given, and one more wonderful thing is given. If you see on the right side, you have given the option to RICO. So the moment you click here RICO, it will fetch all the data as per your P&L. What is your direct expenses? What is your indirect expenses? What is your purchase account? So this total and the clause 44 total matches. You get complete control of your clause 44 reporting. Now, if you don't want to report the depreciation, that is your choice, because the guidance note also says depreciation need not be reported. But all the other columns are there. If you go to the P&L, any item and click, it will take you to the P&L. So this is a good part of it, that you get a complete control over your clause 44 reporting. And for the capital expenditure also, the same format has been given by us. So of course, this depends a lot on the data structure which is maintained by the client. But one thing is that if this add-on is added at a client place, you can always ask them to give you the data accordingly. Or even if the client has not given you the data, you have taken this add-on, you can take out this report, give it to the client, and ask them to at least certify this, that this is the correct classification. This is the way in which you can actually go ahead and report in the clause 44. Of course, whether to report, not to report, whether to give disclaimer. Abhijit ji has very rightly said everything about the clause, so I'm not going into that detail. But yes, if you want to report, we have solved this into Tally. After showing this to the multiple chartered accountant and many corporates, a lot of inquiries come to us whether we have developed the similar thing to SAP or any other software. So currently, no, we have not developed this into any other software. We have just developed this into Tally. Anyone want a detailed demo or a personalized demo for this, just scan this and just give your details. My team will reach out to you starting from Monday, or you can also fill up this form for which I'm giving the detail into the chat section. You just fill up the form. My team will reach out to you, show it to you that how it is to be done. We have tried to solve this into Tally, and couple of things. This works into Tally ERP9 also and Tally Prime also. So that is a care what we have taken here, that it works into Tally ERP9 also and Tally Prime also. So even if you receive the client data in Tally ERP9, this report will work. Even if you receive the client data in Tally Prime, this will work. And this has already been vetted by not many chartered accountants, used by not many chartered accountants, and that's where I requested Virag to allow me to show it here. Thank you, Virag, for this opportunity, and I think it will help them to solve this. If any question around this, I'm here to answer. Virag, is there any question around this or?
No, sir. As of now, we don't have any question. I would like to request participant, if you have any question, you can post in the question tab.
And this is completely, and to tell you, this is completely given to chartered accountant at a very nominal cost, and you can use for all your clients at a one go. I mean, there is no need to purchase separately for a separate client. So this is what we have tried to address this in this tool. Virag, if there are no questions, it is that as just at a click of the button, all the other permutation and combination, Abhijit ji has very well covered into the session, so I need not go into that detail. Just there are a couple of things like if there is a cash expenses, if there is an expenses which is paid directly via the payment entry, how do you address? So again, there's a question, how do you address? So here what we have done is we will classify this as an uncategorized. And as Abhijit ji rightly said, you need to go to the base document, base invoice to identify whether it is from the registered or the unregistered and classify it accordingly here. Yeah. So again,
that is the question we can see. What is the nominal cost charges for tool and cost of TDL? What is the price of the Tally add-on and how to get the same? So
yeah,
only this we can see, sir.
Yes. So we are giving it at very throwaway price. For chartered accountant, we are giving it at a 5,000 plus GST one-time cost. You can use it in as many companies as you want on your tally serial number. And for corporates, we are giving it at 10,000 plus GST because you understand there will be a lot of support required for the corporates. For chartered accountant, always a special discount is extended by the tally. So straight away 50% discount is extended and they can get it at 5,000 plus GST. You just scan this or just fill up this form which is written here. Just fill up this form and my team will start getting in touch with you from Monday for a personalized demo and maybe we'll take it forward from there. So Virag, I'm not able to paste this link into the chat section. Anyway, people need to then either copy this or scan this QR code. Yeah. So thank you so much, Virag, for this opportunity for showcasing what we have developed. I feel it is going to be really useful for the tax practitioner when they are struggling to find the way out about clause 44 reporting. A lot of chartered accountants have started using it, and there are a lot of confusion still. And the session is designed at the right time by you at Connect Easy, and I'm very glad that someone has actually attempted to take the entire session on clause 44. That's so commendable on your part. And that's where we also come in and we try to solve this into tally because tally is used by most of the chartered accountants and the SME segment, even corporates.
Thank you, sir. Thank you. So friends, you can directly touch with sir and the sir is share the details. The QR code is there and the telephone number is also there. So you can connect on Monday. So and with this we can conclude our today's session. Thank you so much, friends, for this by attending this session, and thank you Abhijit sir for making it very interactive session. Thank you Anand sir for the showing tool and the how it will be useful and how the life will be easy for the professional in this limited time. There is no chance for extension. There is no representation from any side or any organization. Anybody is going for the extension request as well. So technology is only helpful in the limited time to do the work fast with very efficient way. So would like to request everyone to be in touch with Anand sir and fill up this form as well. Thank you. Thank you. Abhijit sir, would you like to say anything, sir?
Yes, Virag bhai. Only one thing I would like to tell to all the participants: the basic purpose of having this particular program. We all are good at doing tax audit, but since the clause is now new to all of us, I strongly believe we must be knowing what exactly we are going to report in this particular clause. And if we are not able to report accordingly, then we will give disclaimer. But we will not disclaim without knowing the actual necessity, actual requirement of this particular clause. And I believe by listening and understanding the various issues that are being involved here, now all of us are sure what exactly are the requirements of this clause. Thanks to Anand bhai, even I was also not knowing how to use tally for getting this information. Now we all are ready with the knowledge of the clause, with the knowledge that if at all we want to generate this information, how we are going to generate. Now it is our professional decision to decide whether to generate and disclose or whether to give the disclaimer. That is what is the benefit of having such kind of session. Thank you so much, Virag bhai, for this opportunity. Over to you.
Thank you, sir. We have a appreciation from participant side as well. commendable and very useful session. Keep it up from Sandeep Ji Shah and many others, sir. Thank you, sir, for the wonderful session. So the participants is also giving a vote of thanks to you, sir, for the wonderful session. Thank you, sir. Thank you, Anand Bhai, sir. So friends, with this we are concluding our today's session, and we'll coming up with more and very interactive session like this in future also. So be in touch with us on all our social media. Thank you so much. Thank you from Purvi ma'am. Thank you very much for excellent presentation from Zairuddin ji. So all are appreciating the efforts of Abhijit sir and the Anand bhai. Thank you.